Silver prices are now over $22. Amazing price action in the last week or so. Okay, just wanted to add that in there really quick. So why are silver prices exploding now? And why is the dollar getting weak now? And I think a lot of this has to do with what financial professionals are looking at the money supply. So Spencer Schiff, who is Peter Schiff's son, a chip off the old block, he's on Twitter. You can follow him on there. Really good young economist. I think he's just about to start college. He's either senior in high school or in college now, but he's tweeting out a storm of economic and financial data just like his dad. Yesterday, he put out the M2 money supply is currently up 24.84% year over year. The Fed's next release, which is on Thursday afternoon, may show a growth rate of over 25%. The dollar index is barely above 95. It is at 95.15. So the global economy is not functioning too well. There are, I guess, second waves in other areas. Looks like Peru might be hit. Looks like there are some more mine closures back in Peru. So the global economy, other emerging markets are not earning their dollars. But the main part of this show, though, and I'll talk about some of the other silver current events that are going on with the Sprott Silver Trust in a little bit. Main part of the show, though, is the Austrian True Money Supply, or TMS supply. So let's just talk about the definition of M2, because people are going to ask. M2 is a calculation of the money supply that includes all elements of M1 as well as near money. M1 includes cash and checking deposits, while near money refers to savings deposits, money market securities, mutual funds, and other time deposits. These assets are less liquid than M1. M0 is base money, I believe, and M1's a little bit more, and not as suitable as exchange mediums, but they can be quickly converted into cash or checking deposits. If you want to read about the rest of M2, the Investopedia definition will be below the video in the information and description section after the show is over. The main part of this to talk about, though, is the Austrian money supply. So the Austrian True Money Supply. So Austrian definitions of the supply of money. The definition of the supply of money. The concept of the supply of money plays a vitally important role in differing ways in both the Austrian and Chicago schools of economics, yet neither school has defined the concept in a full or satisfactory manner. As a result, we are never sure to which of the numerous alternative definitions of the money supply either school is referring. The Chicago school definition is hopeless from the start, for in a question-begging attempt to reach the conclusion that the money supply is the major determinant of national income, and to reach it also determines the value of a currency. If the country is issuing too much currency, the currency will get weaker. National income, and to reach it by statistical rather than theoretical means, the Chicago School defines the money supply as that entity which correlates most closely with national income. This is one of the most flagrant examples of the Chicagoite desire to avoid essentialist concepts and to test theory by statistical correlation, with the result that the supply of money is not really defined at all. Furthermore, the approach overlooks the fact that statistical correlation cannot establish causal connections. This can only be done by genuine theory that works with definable and defined concepts. In the Austrian School of Economics, Ludwig von Mises set forth the essentials of the concept of the money supply in his theory of money and credit, but no Austrian has developed the concept since then, and unsettled questions remain. Are savings deposits properly to be included in the money supply? And since the concept of the supply of money is vital both for the theory and applied historical analysis of such consequences as inflation and business cycles, it becomes vitally important to try to settle these questions. Okay, well, Murray Rothbard and then Joseph Salerno later on have worked out the Austrian version of the true money supply. So the money supply metric used in this article, where you can see the chart there, and it's going absolutely insane. So during May of 2020, year-over-year Austrian school true money supply measurement growth in the money supply was at just under 30%, 29.8%. That is insane, even higher than M2. That's up from April's rate. So April's increase in the Austrian True Money Supply, or TMS. And you can find the definition to this. If you want a further definition, you can go on the Mises Institute website. They have it in the Mises Wikipedia. Also on the Mises Institute website, they have monthly updates on the Austrian TMS. And I believe there's also a hedge fund manager, I think, on Forbes. He writes and updates that too. So the Austrian TMS, True Money Supply, supply is something that more certain financial professionals, more hedge fund managers tend to look at. So in April's Austrian true money supply, it was up 21.3%, up from May 2019's rate of, okay, so May 2019's rate in the money supply, this is a comparison sake, it was only up 2.15%. So we've gone in a year from 2.5% in May 2019 to 29.8% in May 2020. Historically, that's over a 10x move. Almost a 15x move, little under that. This is a very large surge, about a 14x move. This is a very large surge in growth, both month over month and year over year. It is also quite a reversal from the trend that only just ended in August of last year, when growth rates in the money supply were nearly bottoming out around 2%. In August, the growth rate hit, and this is because the Federal Reserve was contracting the balance sheet, was doing quantitative tightening, was temporarily raising interest rates up until about August 2019, and the Fed's balance sheet was declining, which means they are trying to take liquidity out of the system. Money supply growth surged to an all-time high in May, following April's all-time high that came in a wake of unprecedented quantitative easing, central bank asset purchases, and various stimulus package. The growth rate, this Austrian school true money supply growth rate has never been higher, with the 1970s the only period that comes close. It was expected that money supply growth would surge in recent months. This usually happens in the wake of early months of a recession or financial crisis. The magnitude of the growth rate, however, was unexpected. So in August, the growth rate hit a 120. In August 2019, the growth rate hit a 120-month low, falling to the lowest growth rates we'd seen since 2007. The money supply metric, which you can see the chart on your article. Also, I have the title of the article, and the full article will be below this video in the information and description section later from the Mises Institute website. The article came out on July 9th. The money supply metric used here, the true or Murray Rothbard Joseph Salerno money supply measure, or TMS, is the metric developed by Murray Rothbard and Joseph Salerno and is designed to provide a better measure of money supply fluctuations than M2. The Mises Institute now offers regular updates on this metric and its growth. This measure of the money supply differs from M2 in that it includes Treasury deposits at the Fed and excludes short-time deposits, travelers' checks, and retail money funds. The M2 growth rate also increased to historic highs in May, growing 23.09% compared to April's growth rate of 18.01%. M2 grew 4.2% during May of last year. The M2 growth rate has fallen considerably from late 2016 to M2 growth rate had fallen considerably from late 2016 to late 2018, but has been growing again in recent months. As of March, it is following the same trend as the Austrian true money supply. Money supply growth can often be a helpful measure of economic activity. During periods of economic boom, money supply tends to grow quickly as banks make more loans. Recessions, on the other hand, tend to be preceded by periods of slowdown in rates of money supply growth. However, money supply growth tends to grow out of its low growth trough well before the onset of recession. As recession nears, the TMS, or true money supply, growth rate climbs and becomes larger than the M2 growth rate. This occurred in the early months of the 2002 and the 2009 crises. February 2020 was the first month since late 2008 that the true money supply growth rate climbed higher than the M2 growth rate. The true money supply growth rate again exceeded M2 in March and April 2020. As of mid-April 2020, it does appear that the decline in money supply growth has again preceded a recession. Although some observers will likely claim that the current economic crisis is a result solely of the global pandemic and resulting government-forced shutdowns, several indicators do suggest that the economy was primed for a recession before that. The decline in... He's being way too kind here writing this article. This article is by Ryan McMakin, if you're familiar with the Mises Institute. The decline in true money supply is one of these indicators, as is the late 2019 liquidity crisis in the repo markets. The Fed's moves to drop interest rates and to once again grow its balance sheet speak to the weakness of the economy leading up to April 2020. After initial balance sheet growth in late 2019, total Fed assets surged to over $7 trillion in June, and with even more than that, the real fireworks are off the balance sheet, setting a new all-time high and propelling the Fed balance sheet far beyond anything seen during the Great Recession stimulus packages. Also, the Treasury general account, which I think is over $1.8 trillion, which is just insane. The Fed's assets are now up more than 680% from the period immediately preceding the 2008 financial crisis. While Fed asset purchases are not solely responsible for the surge in new money creation, they are certainly a sizable factor. Bank loan activity has surged as well, overall, also driving new money creation. In terms of total dollar amounts now in existence, the overall M2 total money supply in May was 17.9 trillion, and the true money supply total was 17.4 trillion. This is an increase of 4 trillion in M2 and 3.3 trillion in total money, true money supply for the Austrian school true money supply. So silver is starting to, I think silver is starting to really track the money supply growth. Currency supply growth. It's not really money. Digital debt-based fiat currencies are not really money. So we have 30%, according to Austrian school true money supply, just under 30% year over year money supply growth. Nuts. Now, if the velocity of money in the real economy stays low, this will only be bad stagflation. If the velocity of money picks up, oh my God, it's going to get so much worse. We're just going to have worse stagflation, though, if the velocity of money does not pick up. So that means in the real economy, I wrote an article about this for my patrons, I want to say in the last couple months, maybe 6 weeks ago, about distortions. So the more currency and credit that these governments and central banks and MMT checks and bailouts, the more that this is done, the more and more rules, regulations, taxes, and intervention by economic central planners, governments, and central banks, the more distortions in the real economy. And these distortions are not short-term. These are like a lot of small businesses in different industries going out of business. These are entire industries becoming uneconomic, a bunch of unintended consequences by different lever pulling. Dude asked me why I blocked him on Twitter because he's bragging about buying cocaine for his girlfriend. Bye-bye. He's bragging about having his girlfriend and going partying. Okay? Not your real girlfriend, bro. Sorry, just had to squish that troll real quick. Okay, so the silver news. Lynn Alden put out a tweet about the silver market. Let me pull it up here. I have her Twitter up right now. Let me see. Okay, here we go. The silver to Dow ratio broke above its 50-month moving average for the first time since 2002. So very good. Another bullish trend, bullish piece of news for silver. Tavi Costa has really great charts here about the silver market. Definitely looks like silver has finally bottomed. Bottomed a couple months ago. Right as the Fed was adding 2.85 trillion to their balance sheet in the last 4 months. So silver was putting in a hard bottom. And if more silver mines or base metal mines with silver byproducts shut down, that will also help silver on the supply side. I'm hearing that premiums are starting to increase again for physical silver to buy it. This is the first, this is the highest price in silver since 2016. Finally, the King World News story. The Sprott Silver Trust is going to purchase 1.5 billion ounces of physical silver, a jaw-dropping 8.8% of annual global production. So, let's see here. Oh, it looks like I don't see the press release. It's a bunch of gobbledygook here in the King World News article. Let me see if I could just quickly get the article up here with the Sprott Silver Trust. Sprott Silver Trust. Okay. Nope, I don't see it. Looks like King World News broke that story then. I don't see... Yeah, I don't see a press release. So I guess they're gonna... Or they had a shelf offering filed. That might be it then. Let me take a look at the silver chart. So the silver chart... Interactive chart. Pull up silver. I'll just take a look at listener questions and comments. I can't get the chart up right now. I have Kitco up and the interactive chart's not really working that well. Let's see here. Here we go, 1 month chart. So on July 13th, silver was at 19, and it was flat for up until July 20th, and then it's taken off. It was really painful for silver to stay below 16 and around 16 for a while. The overhead resistance for silver, there was overhead resistance a little above 20 at 21 and 23. So we're already through the 21 overhead resistance. Let's see if we close above the overhead resistance at 21 for at least a couple days, maybe a week. And then the next major overhead resistance is at 23. Silver has already gapped up quite a bit. If the next major overhead resistance is at 23, if it gaps to 23, it could go to 25, 26, 27 very, very quickly. And if it breaks like the 23, 24 range, it could probably get to 28 to 30, at least test it fairly quickly. Nomad Diesel says silver is up 16.7% in just the last week. That is impressive. Caesar says inflation AF. So this is just monetary inflation. So this is not, all this inflation is not going into the real economy yet. We'll see what happens with the next round of stimulus checks, or if there's going to be permanent MMT depending upon what happens in the November 2020 election. So there is a lot of monetary inflation in the real economy right now. There is a lot of monetary inflation in asset markets right now, and we'll see what happens with the real economy. Obviously, there's stagflate and tax and lie, while all the people on TV talk about deflation. I mean, my bills always go up. Every year or two, my bills go up substantially, while people on TV scream at me how bad deflation is. It's been this way for a long time. Wow, the troll even paid for a super chat. Wow, what a loser. Dude, you were trolling me on Twitter about your girlfriend and all this other BS, dude. It's just ridiculous. Don't talk shit unless you want to get blocked, bro. Also, I wouldn't be bragging about your seeking arrangement girlfriend. Normally, I can't believe that guy even paid for a super chat to ask me why I blocked him. Just ridiculous. Yet silver is going to be very volatile. It's not going to go straight up. And what we know what happened in 2011, there's going to be margin changes. At some point, the COMEX and the LBMA are going to attempt to slow down the silver rally. So they're going to come up with this bullshit excuse saying, oh, due to volatility, we're going to have to raise the margin requirements 10 times in 3 days. Because if you're around in 2011, that's exactly what they did. They did an insane amount of margin requirement increases. And then I'm going to get messages saying, Jason, the hedge funds are not long silver futures anymore. You don't know what you're talking about. Well, why did the hedge funds get out then? The hedge funds got out because the exchanges increased margin requirements 10 times in a week. So the hedge funds know that it's going to get smashed. So we'll see what paper games or delivery games. People might be waiting 6 months for delivery, just like Jim Popolava was for his ton of silver that the COMEX supposedly had many tons of. Jim Popolava had to wait over 6 months for his ton of silver that he ordered in 2008. that supposedly were in COMEX vaults. So there's going to be more games coming by the exchanges. Hey, if they can screw over the Hunt brothers and the Hunt brothers were billionaires, they can certainly screw you over if you're long silver futures contracts. That was the main mistake the Hunt brothers got. They were too greedy. So they were going to start a silver mine. They had a lot of physical silver. They were hedged with their oil profits and their oil business and their other businesses and their other savings. So they had a lot of physical silver. The main mistake the Hunt brothers made was they got involved with margin, with leverage in the silver futures. That was the main mistake that they did. So do not make the same mistakes as the Hunt brothers. I don't want to be getting messages either on my Patreon or below YouTube videos that you went out and bought a silver futures contract. Do not buy a silver futures contract, because they will come up with new ways to screw you over. Let the hedge funds do that. Let the unhedged, over-leveraged hedge funds do that. Unless you're a hedge fund manager, stay away from the silver futures market. Okay, I have a couple super chats. We'll get to that. This is just going to be a short show. Honestly, I can't keep a straight face. I'm laughing at that troll so much. It's really difficult to concentrate right now. How ridiculous that guy was. I remember that guy too. He was trolling me on Twitter and then it doesn't expect me to clap back. Unbelievable. What an amateur hour this is. Okay, Eric Smith, thank you for the super chat. Because of you, I bought some Pan American silver, which is doing great, so I wanted to tip you $10, but unfortunately you also convinced me to sell some of my Hecla. Pan American Silver is a better company in a rising silver price environment. Hecla, which is not a good company, not well managed, has higher cost mines. Hecla is going to do well. So that was my rationale why I don't like Hecla. Because at the time, a year ago, Hecla had silver prices were nowhere near these levels, and Hecla had immense amounts of problems with an acquisition. Their costs were too high, and they had balance sheet problems. So when the commodity price changes, Eric, companies like Hecla do well. Hecla was much higher risk. If you're willing to take more risk, Hecla probably has some upside. Although I still don't like management, and there's always immense problems with a miner.